Barrel rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno-monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Hello, I'm Professor Code, and this is the Forex Super Model data cycle model for the 22nd of the 1st to the 29th of the 1st, 2021. What this basically is our model version of the economic calendar, where we model the fundamental data as it comes out, and basically assign a discrete numerical value to the data, and we split the data into roughly weeks, so 7-day periods, apart from the end, depending on the length of the month. So 1st to the 7th, 8th to the 14th, 15th to the 21st is the first, second and third week, and we're now looking at the 22nd to the 29th, which is the final week of the trading month of January 2021. So let's look at this. We're going to stop the video as we write up the different complex data. But anyway, let's make a start then, and then we'll talk about it at the end. So China then. So you can see that the China data, week 1, 2, 3, 4, so we've got -1, +8, -1 for tier 1, +8 for tier 2. Now this is pretty much static then, so the China data has leveled off at that period, so that gives us the China picture. The dollar, if you remember, this week we've had the Fed, Wednesday we had the Fed rates decision and subsequent minutes and press conference, and if you look here, you can see that we had the tier 1 data for week 1 +3, then +3, then -3, and then the tier 2 data +2, +10. So in week 2 the tier 2 dollar data accelerated, then it more or less flattened out, whereas the tier 1 data deteriorated a little bit, and now we've got a slight deterioration, deterioration in the tier 1 dollar data, but we've got a major ramp up into tier 2 data for the dollar for the 4th week, the final week of this month. So that's something to bear in mind. That's really part of the story of the dollar strength in week 4 of this month. So we're going to stop it there and put up the next two. So here we go. Right, welcome back. This is the next two, which is the German data, specific to the German part of the EU, and we're also going to do the EU as a group. So anyway, start with the German data. You can see that in the first 3 weeks the tier 1 data has been neutral, 0, 0, 0, and then we've had an acceleration in this last week to +4, and you can see that the tier 2 data +3, +2, +7, and we're at +7 here. So the tier 2 data has leveled off, but the tier 1 data has accelerated. So we've got an improvement in the German data, basically in the German data cycle. And overall in the EU then we've got a situation of tier 1 -5, -5, -5 for the first 3 weeks, and then this new week we've got -6, so slight deterioration in the tier 1, and then we've got -5, 0. So in the week 2 we had an significant improvement in Eurozone data, tier 2, and then it leveled off at 0, and now we're romping ahead again now, so at +5. So we've got, to sum up the Eurozone then, we've got the German data tier 1 improving significantly to +4, and the tier 2 holding steady at +7, and we've got a slight mirroring of that in that we've got a slight deterioration in tier 1 data on the Eurozone as a whole, but we've got a significant ramp up in tier 2 data. So that gives you an idea where we are. The Eurozone with the German driver is starting to ramp up in terms of the data cycle. So we're going to stop it there and move on to the next two. Right, we're back again. We've written up the yen, the JPY, and the pound, GBP. So let's have a look at the yen then. So the yen tier 1, first 3 weeks, 000, neutral, and this last week of the month, 22nd to the 29th, 0 again. So the tier 1 is neutral. And tier 2 we've got +2, +6, +6, and then we've got +17. Right, so we've got a ramp up in tier 2 yen data for the last week, which is what we're talking about. And interestingly, if you watch the weekly review, you'll see that the yen in terms of flows has been last month, the whole of last month was basically driving negatively, and then last week it's the unopposed negative driver. So this ties in with the with our view that the yen has pretty much hit a floor. If you look at the VIX, you can see a spike in the VIX recently. So this ties in. The yen, in being weak, is now starting to fight the data, is fighting the metrics. We know that the yen is often used as a carry trade currency, and has a significant equity transmission, and we've also had a fall in equities. So you see you've got this distortion in the market. You've got the yen being the negative driver for the month and the most recent week. Yet you've got yen tier 2 data spiking and accelerating, and you've got this disconnect, and we believe that next week the yen is going to start really sucking in positive flows. So anyway, watch out for the Monday briefing for that anyway. So the pound then, we tier 1 0 0 +2 +3 on the tier 1. And then tier 2 +1 +1 +10, so we had an acceleration in week 3 of the data, and the data has dropped off to +5. Now the pound is worth an extra talk as well, because the only reason we've got this situation here, +3 and +5, is off the back of what we believe to be fairly spurious pound data. We had this claimant counts and the unemployment, which are being propped up by the furlough scheme in the UK. So the GBP data is distorted by a significant furlough scheme, and this has pumped up tier 1 and tier 2 data, which in our view should be significantly lower. It probably should be about 0 0, neutral. So you can see that there's been a deterioration in the pound tier 1 and tier 2 data, but superficially from the modelling it looks like it's not as bad as it is, but we feel it's going to be worse than that. So this ties in with our view. So we're likely to see yen strength coming, and over the month, remember we've had pound strength, significant pound strength, and last week we had significant pound strength. So really the flows are very likely to reverse into the yen and out of the pound. That's our view. Anyway, let's move on to the next pairs, complexes. Right, here we go again. We've written up the CAD, Canadian dollar, and the AUD, the Australian dollar. So the CAD then, tier 1, 0 -2 0 for the first 3 weeks, and then we've got a big ramp up last week, +8. So the CAD tier 1 data has significantly improved this week. And tier 2, +2, +3, -5, -1. So while still negative, the tier 2 has improved. So the CAD forward data cycle looks to be improving in terms of our data. So So that's something to note going forward next week. Right, AUD, Australian dollar, tier 1 -2 +1 +2 +2 then, so it's mildly improving and then plateauing. Tier 1 0 +2 +2 +4, whereas the tier 2 has improved a little bit more. So the Australian dollar is getting mild fundamental data improvement as far as we're concerned, whereas the CAD is getting a significant cycle improvement. So there we are then. Let's look at the next two. Right, we're back again then. So these are the last two complexes, the New Zealand dollar and the Swiss franc. So the New Zealand dollar then, tier 1 0 0 +2 +2. So we've had improvement during the month, but it's now plateaued on the tier 1. Tier 2 0 -2 -2 -2. Deterioration during the month, and which is also plateaued. So no great shakes in the New Zealand dollar from a forward data cycle perspective. Looking at the Swiss franc then, tier 1 neutral all the way, 0 0 0, and the tier 2 -4 -2 -2 -2. So mild improvement but plateauing on tier 2. So again the Swiss franc, nothing to write home about in terms of forward data cycles. So what are the big takeaways of this model data cycle then? The key ones as far as we're concerned is the yen. The yen is coming up significantly in terms of what was it, tier 2. So it's gone from +6 last week to +17 in the week we just had. And the tier 1 is stayed neutral, and the pound likewise has had the opposite. It's basically deteriorated and has been propped a little bit by we believe spurious data from claimant counts and unemployment, which is propped up by the UK furlough scheme. So in short, the GBP, the pound, is data cycle looks a little bit better than it should do, and the yen is probably spot on in terms of where it's going. So, and also if you link that with the flows, as we said, you've had tremendous outflows from the yen over the month, over January, and last week it's the unopposed negative driver, which normally means either a floor or a continuation of the ramp up, and we believe, without sounding like a broken record, this is a floor in the yen, and the majority of the monthly positive flows have been going into the pound, and we are fairly confident that the pound has topped out. So that's why we've been selling the pound, and it's been difficult all week because we've basically been slightly ahead of the game in terms of modelling, but that's just the way it is. But next week we believe that you're going to get significant inflows into the yen complex and out of the pound complex. We shall see. Watch out for the Monday morning daily briefing, and thank you for watching. Hope it was useful.